Good evening, everyone. Thank you for joining me again. My name is Deborah Slade. I'm the Assistant Director for Outreach in the UNCG Financial Aid Office. And this evening, I want to talk to you about student loans and how they work, just some things that you might need to know about loans, and hopefully answer some of the questions that you may have. I want to make sure that we're covering everything that's important to you and that you have an opportunity to get your questions answered and make sure that you, again, have a good overview of what the student loan process is all about. All right, so let us get started. I'm going to share my screen in just a bit here. I want to make sure I'm going to put some things in the chat just to make sure we can get your questions if you have them, so you know how to interact with us if you need to. So let me put a comment out here for you. All right. Okay. Alrighty. Well, for whatever reason, that's not happening the way I want it to, but hey. Okay. All right, so let me go ahead and share my screen and show you what the, just kind of go over some pointers. And this is going to be brief. I'm not going to do a deep dive. There's a lot that we can cover in student loans, but I don't want to overwhelm you. I just really want to give you a good general overview so that you know basically what's happening and how to, how to get back to your award and know what you're looking at and know how to make some decisions. So let's go into the first slide and talk about what types of student loans are out there. Let me just move me out of the way here. Okay. So I'm going to split my video out so I'm not intruding on you. All right, so we have two types of federal student loans, and we're talking now about the federal loans. We're not talking about private loans that you might go to your bank or go to a private lender. These are loans that are through the federal government and that you would be the student. In this first case, we're talking about loans that are just for students. So the first loan is the direct subsidized loans. There are two types. And as I've mentioned before, these are both for the student and both for, so that they are, you apply through the FAFSA, and these would be appearing on the student's award notice. So the subsidized loan is based on financial need. So you have to qualify for this particular loan based on your finances. So that's why you have to complete the FAFSA in order to do that. Because I know a lot of people say, well, we're just going to take out loans. We don't qualify for scholarships and grants. We're just going to take out loans. But if you want to take advantage of the federal student loan programs, you will need to complete the FAFSA, the free application for federal student aid. If you have questions about that, we have tons of videos that we've done throughout October going over the FAFSA process, how to apply, some questions there. And if you have additional questions, we certainly want to make sure that we can answer those. So, feel free to call our office if you have any questions as far as that's concerned. So the first type of loan is a direct subsidized loan. And these are available to undergraduate students only. So if you're getting a master's degree, you're not eligible for the subsidized loan. So it's only for students in an undergraduate degree program. So your school will determine how much you can borrow. And again, this is based on information from the FAFSA. Your EFC, or the expected family contribution that we talked about in some of the other videos, that plays a part in that. The cost of attendance, which we talked about last week, is part of that formula. So And we also look at all of the other aid that you've gotten, because frankly, if you've gotten a lot of scholarships and grants, then you may not need a student loan. So we typically will offer you whatever you need, or whatever you're up to your maximum eligibility. So you also need to be at least half-time, and you have to be enrolled in a degree seeking program. So if you are just taking classes for fun, you're not in a degree program, you're not, the classes you're taking will not lead to your earning any type of degree, then you would not be eligible for the federal loan programs, and actually wouldn't be eligible for federal aid at all. So you have to be in a degree program, and you have to be at least enrolled at least half-time. So for UNCG students in an undergraduate program, that would be 6 credit hours. You have to be at least enrolled in at least 6 credit hours. So one of the things about this loan is that the reason why you have to qualify for it is because it's based on financial need, as I indicated before. But the caveat is that there is no interest accruing on this loan while you are enrolled at least half-time. So that's a really good thing. So it's interest-free while you're in school, enrolled at least half-time. And you won't start paying the interest until 6 months after you've graduated, or after you're no longer enrolled in school, at least half-time. And so you enjoy some benefits of that. So as you see on the slide, it says the Department of Education pays the interest on a direct subsidized loan while you're in school at least half-time, or the first 6 months after you leave school, and this is your grace period. And then during any periods of deferment, and this is deferment is a postponement of your loan payments, and there are lots of different reasons why you could be in deferment. Typically, it's because you are in school, you're enrolled in a program, and you're still earning your degree. So that would be a reason that you would be in deferment. That's the federal direct subsidized loan. Remember, if you're offered loan options, if you qualify for the subsidized loan, we will offer that on your student aid award, your student award letter, and you would need to accept that so that you can make sure that you use that. And that is the better of the two loans. Now, the next loan, the other loan, is the direct unsubsidized loan. Now, this is available to undergraduate and graduate students, and there is no financial need requirement for this loan. You still have to complete the FAFSA, but you don't have to meet the financial need requirement to qualify for this loan. Again, the school will let you know how much you can borrow, and again, that's going to be based on your cost of attendance and other aid that you have been offered. Now, the major difference with the unsubsidized loan is that there is interest accruing on the loan while you're in school. So that is the major difference. So you want to make sure that you're borrowing, if you're eligible for the subsidized, that you borrow that first and borrow what you need of that. And then if you have as much of the subsidized as you can get, if you get the max and you still need to borrow, then you would consider using some of the unsubsidized. So with this loan, you're responsible for paying the interest while you're in school during all of the periods. So while you're in school, while you're in the grace period, interest is still accruing on the loan. And it starts from the time that the loan gets paid onto your student bill. So that's something that you want to keep in mind. If you decide that you do need a loan, again, we always suggest that we just encourage you to only borrow what you absolutely need to make sure you're covering your expenses. Don't borrow just because it's offered. Sometimes that is tempting. And in many cases, some students will take the unsubsidized because maybe it's the smaller loan. So, I'm going to borrow less. That's not always the best option. If you need a smaller amount, borrow it from the subsidized. Now, you have options as far as the interest is concerned. Although the interest is continuing to accrue on the loan, you can pay it while you're in school. And when you pay that, you're not obligated to make any payments toward the principal of the loan. You're not locked into any type of payment schedule. You just have the option of making these interest payments while you're in school. And one of the things that this does is it helps you avoid that accumulation of interest over the life of the loan. So you see on the screen, it says, your interest will accrue or accumulate and be capitalized that means that all of that accrued interest will be added to your loan principal when you go into repayment. And then that accumulated interest becomes part of the principal loan, and then it will then be subject to interest accrual. So you can see how, that interest on interest is not in your best interest. It's kind of like when I do the financial literacy sessions and we talk about saving and we talk about compound interest. Well, that's a good thing if that money is going into your savings account or some money market account and it's earning interest, and then the interest is accruing interest and it's saving to you. That's a good thing. But in loans, that's not a good thing because that's increasing your loan indebtedness. It's increasing the amount that you're going to have to pay overall. And in the end, so it's really not a good thing. So I encourage you to go to studentaid.gov and do a search for loan types if you want more detailed information about what the loan programs are all about. Again, my goal tonight is mainly to give you just an overview, a very general overview of what the loan process is all about and what the different types of loans are, so that you can, you can see what's going on and you can make sure that you are, again, you're getting good information and you don't have questions and you're not caught off guard and not borrowing more than you need to or making bad loan decisions. So let's move to the next type of loan. We talked about the student loans, and these are loans that are in the student's name. The other type of loan that we have that we want to talk about is the direct plus loan. Now, there are two types of plus loans. The one that I want to talk about right now is the parent loan. This is the direct plus loan for parents. Now, this is a credit-based loan that's available to parents of dependent undergraduate students. And like the unsubsidized loan, there is no demonstrated need required. So you don't have to have need. You do have to complete the FAFSA. And I must stress that only a parent, so only the legal parent, can borrow for the student. And that could be, again, if you're in one of a blended family situation, or if you're in a different family dynamic, maybe your biological parents don't live together, but your biological parents could, even if they don't live together, and if one is not listed, they could take out the loan on your behalf. It has to be a parent, it cannot be some other relative like a grandparent or an aunt or uncle or cousin. It has to be the legal defined parent. So that would have to just keep that in mind. So again, the school would make the determination on the maximum amount. You can request an amount up to the cost of attendance minus any other aid. And if your student is eligible for that amount, then certainly that amount will be awarded. Once you have gone through the loan process or the application process and you apply online at studentaid.gov, you would log in with your FSA ID and complete the loan application there. And one of the questions that you will be presented with will be, how much do you want to borrow? You can enter an amount, or you can request the max allowed. And that would then come back to the school to make that determination of what other aid does your student already have, what is the cost of attendance, and that will determine the maximum amount of the loan. And again, you also have options to decrease that amount. The payment or repayment begins on the loan 60 days after the final loan disbursement each 8 years. So what that means is typically the parent loans or any loans are done based on an academic year. So half of the loans are paid out onto the student's bill in fall semester, and then the other half is paid out at the beginning of the spring semester, typically in January. So 60 days after that spring portion has been paid to the student's account is when repayment on the loan will start. And that doesn't mean you have to pay the full amount at that point. It simply means you would start making payments on that loan. Now, you do have some options. Parents, you can request that you don't start paying the loan until your student who's enrolled um, i- um, graduates or is no longer enrolled. So you can have the same type of deferment option as your student. The caveat here is the interest will be accruing even during the deferment period. So that means if you want to wait until your student's a freshman, you borrow the plus loan now. You say, I want to wait until my student is graduated, and if they graduate or they're no longer enrolled, have time, then I'll start repaying it. Your interest is still accruing during that period. So that means you could have 4 years or more worth of interest on the freshman year loan. So I have to be honest with you because I don't want you to walk into this blind and not knowing exactly how this works. So just know that. Just want to make sure that, again, you are getting the answers and you know exactly what's going on and how things are working out for you. So, sorry, didn't mean to make that. Didn't mean to have that going too loud there. Okay, so one of the things that we also want to do is make sure that if you have any questions about that, you can go to studentaid.gov and click on more information about the loan process. Parents, you will need to complete a master promissory note. You will also need to do that at studentaid.gov. And again, you would log in with your FSA ID and everything would be on that site. Excuse me. So eligibility requirements, and I kind of went over this a little bit in brief. Students must be enrolled at least half-time. For graduate students at UNCG, half-time is 4.5 hours in courses at the 500 level or above. You must meet satisfactory academic progress, meaning you are on track to graduate with your degree. You are earning the credit hours, or at least 67% of the credit hours that you attempt each time. So you're in good standing, so you're on track. And if you have previous or prior student loans, those loans must be in good standing, meaning you can't be in default on those loans, you can't be behind on payments. They must be in good standing, and until they are, you wouldn't be able to get any federal aid. You'll have to bring those loans into good standing. And there are remedies to do that, to make that happen. But since this is geared more for first-year students and students who are still enrolled, you haven't gone into repayment yet, so you haven't had an opportunity to have a loan in bad standing. But then again, there may be some students who've been out for a while and you have questions about that. What happens if I don't make my loan payments? Well, yeah, you could have some problems. You could go into default, and that would hurt your eligibility for federal aid and for getting more student loans. So I just want you to remember that. Now, I talked about the parent loan, and I do want to mention that graduate students are also able to do a credit-based plus loan as well. And that would be on student loans, studentaid.gov, not student loans, studentaid.gov. And there are credit requirements for those loans. For most of those students, these are the 8-year and cumulative loan amounts or aggregate loan limits. So let me just go through that very quickly. So dependent students, and these are students who have to provide their parents information on their FAFSA. You're eligible for $5,500 per academic year, and that's both subsidized and unsubsidized, but only $3,500 of that can be subsidized. And that doesn't mean that you will automatically get $3,500 in subsidized, because remember, I said that is a need-based loan, so you have to qualify for that. You may qualify for less than $3,500, but then the difference would be made up in the unsubsidized. So you can get a total of $5,500 per academic year, so $2,750 per semester that would be offered to you. And of that, only $3,500 of that could be subsidized. meaning that would be the interest-free portion. The second year, where sophomore students, you're eligible to get up to $6,500. Again, $4,500 of that can be subsidized. And then once you reach your third year, once you've earned enough credit hours to be considered a junior, from that point on until you graduate, you are eligible to get up to $7,500 per academic year. Again, with $5,500 of that being subsidized. So one of the things that you have to keep in mind, and I keep saying dependent students and that loan amount, and you see in the block, it says dependent students except students whose parents are unable to attain the PLUS loans. So in the event that your parent applies for a PLUS loan, remember we talked about the PLUS loan being a credit-based loan, which means that the loan could possibly be denied if the borrower is not approved based on your credit. In those instances, there is an opportunity for the student to then be eligible for additional loans, which would be unsubsidized. So then we would look into the block for the independent students. If you see here, if a dependent student's parent is not eligible for the PLUS loan, they get turned down, then that student gets treated as an independent student, and they may borrow an additional $4,000 to bring them up to $9,500 for the academic year. Still held to that $3,500 limit on the subsidized, okay? So you want to keep that in mind. You're still held to that $3,500 limit on that. Sophomore students, again, whose parents are not eligible or are denied, get denied based on credit for the PLUS loan, you would be eligible for an additional $4,000, $6,500 for. That would bring you up to the $10,500. Again, you're still limited to the $4,500 in subsidized. The subsidized amount does not change based on, so you would only be limited to that grade level amount in subsidized, but you may be eligible for additional unsubsidized loan up to $4,000 more. Juniors, and when you become a junior, the amount increases. You would be eligible to borrow up to $5,000. Now again, remember, this is going to be determined by your other aid that you have available. You wouldn't be able to exceed the cost of attendance, and you can't exceed your loan limits. So for juniors and seniors, again, you're limited to the $5,500 in the subsidized loan, but you may be able to get an additional $5,000 in unsub, and that would bring you up to the $12,500. Now, I haven't talked much about graduate students because, as I said at the outset, this is mainly geared to our undergraduate students, especially our first-year students who are going to be coming in, and maybe you're coming in the spring semester. I wanted to talk to you a little bit about the spring semester students. But if you're a graduate student, you're not eligible for the subsidized loan. You're only eligible for the unsubsidized, and you can get up to $20,500 per academic year, based on, again, your cost of attendance and other aid that you have amassed. So now let's talk about the lifetime limits, because this is very important, where we don't want you to over borrow. We want you to be very mindful of how much you're borrowing, because it's really easy to accept all of the loans every year, and we want you to be careful how much you're borrowing so that you don't go over. Just let me step back a minute. So even if you just borrowed the max here every year, so look at this number. So let's say every your freshman you borrow the $5,500. You are progressed to sophomore level, you borrow the $6,500. So now you borrowed $12,000 in 2 years. Well, now you're junior and you borrow the $7,500. Now you're up to $19,500. Senior, you borrow an additional $7,500. So now you've borrowed $27,000 in 4 years, and we haven't gotten over into the additional unsub if your parent was not eligible to use the PLUS loan. So this is why we stress so heavily to be mindful of what you're borrowing. Utilize other resources. Do your scholarship searches. Make sure you're looking at every other resource before you borrow. Borrow only what you need to cover your expenses. It is really easy because you don't have to qualify for these loans based on credit. You only have to fill out the FAFSA, and we will offer you the max that you're eligible to get, but because we offer that, that doesn't mean you have to accept it. But we want you to make sure that you're using the loans in a responsible way, making sure you're using it to pay your expenses and moving forward. So we don't want to hinder you, but we also want to make sure that you are mindful of how much you're borrowing. So it's a good idea to always keep an eye on your loan history. Go to studentaid.gov and you can look at your financial aid history, check your loan limits, check your loan debt. I would suggest you do it every year just so you're mindful of how much you're borrowing so that when your award letter comes for the next academic year, you know how much you're borrowing, you know how much more you're going to be adding to that debt. Student loan debt is real. It is very real, but you can manage it if you just, again, go into this with your eyes open, setting your budget, setting your limits on how much you need to spend, utilizing other resources. So let's look at the lifetime limits. So if you look down here for dependent students, the maximum that you can borrow is $31,000. Okay, total. That's the max. So that of that, only $23,000 of this amount can be subsidized. So that's a lot. That's still a lot of money. And again, we want you to be careful about that. Now, if you are getting treated as an independent student because you're plus loan denials, then your loan limits go up. So, and if you're an independent student, this is a student who doesn't have to provide their parents' information. That's what this column is for. You're an adult student, you're an independent, you don't have to provide parent information. So these are your limits. And I didn't do the math on that, but just let me do that real quick for you. So if you're a freshman and you're taking out the $9,500, and then as you get to be a sophomore, you're taking out the $10,500. So in 2 years, you got $20,000 in loans. So then your junior year rolls around, you take out the full $12,500. Now you're at $32,500. And then your senior year, you take out the additional. So now you're at $45,000 in 4 years. And you can see how that can add up. And you can see why we're stressing so hard to please be careful. Please be mindful of what you're borrowing. Because now you're looking at you can borrow up to $57,500 as an independent undergraduate. You're still limited to that $23,000 in subsidized. So if you subtract that out, if you borrow the max, that means you have, so if you borrow the max every up to the $57,500, and if you've gotten the max in subsidized, that means that $34,000 of that is unsubsidized loan and has been accruing interest. And if you haven't been paying the interest on that, that means it's going to be accruing. Yeah. So, yeah, think about it. And if I'm scaring you, good. Because I want you scared. I want you to be able to make some good decisions about this. I don't want you to go into this blind. Now, graduate and professional students, you can borrow up to $138,500. No more than 65,000 of this can be in subsidized loan. Now, this includes all of your undergrad loans as well. So, don't freak out on that. So that includes your undergraduate loans as well. So I get some common questions from especially for first-time borrowers. So some students want to know, do you need good credit to get a student loan? Well, no, because federal subsidized and unsubsidized loans are not based on credit. So students don't have to have good credit. They don't have to have a credit history. And we also get questions, are parents required to sign for the student's loan? No. Federal subsidized and unsubsidized loans are in the student's name. Do not require the parents to co-sign for the loan. And a lot of times we get questions like, well, wait, they're 18 or they're not quite 18. Because of their status as a student, in an institution of higher ed, they do not have to have a cosigner for those loans. So again, these are conversations that you want to have as you start to plan out your college financing. You want to make sure that everybody is understanding what the obligations are. So parents, you would not be on the hook for your student's loan. Now, for private loans, if you want to go outside the federal system, let's say you decide you don't want to do a parent loan, but maybe you want your student to borrow a private or alternative loan. Again, I'm not advocating this. I'm saying these are available and these are something that you could consider. People do. Those loans are credit-based and may require a cosigner, because if it's in the student's name, they will be looking at the student's credit history and credit record. And again, if they are have not established credit, a cosigner is certainly one of the things that might be required. So I just want you to be mindful of that. For students who are coming back, so let me just put this slide up. This is some links to additional information so that you can make sure that you have that information. You can see how to get more details on this. I want you to, definitely take time to look this stuff up. Make sure that you are researching, that you are getting your answers, your questions answered, that you are, that you're not in the dark on these things. Okay, so if you are, I'll leave that for just a bit. If you are a transfer student, so if you're going to be attending, transferring from a school, you're enrolled right now, you're in a different school, and you're going to be transferring to UNCG or, maybe another school, and you already have student loans. What happens to those loans when you get to the spring? You get another allocation of those yearly amounts? No. If you've already used half of that, the fall portion of that loan, you can only get the spring portion of your allocation at your new school or at UNCG. And one of the things that we'll be doing is checking the loan records to make sure that that your loan has been, you canceled the spring portion of your loan at your old school, so that we can make sure we get it paid to you at UNCG. And we'll also be making sure that you didn't get all of your loan in the fall, because that's possible too. Typically, the loans are divided in half. Sometimes students request to get more of the loan in one term. That's certainly possible. But just remember, if you've taken out, let's say you were a freshman at another school, you're transferring into UNCG for the spring semester, and you were awarded $5,500 at your old school. You decided you wanted to take $4,000 of that in the fall semester. But when you come to UNCG, you will only have $1,500 in eligibility left. The only way that you would be able to get more is if you are a dependent student and your parent applies for the parent loan and they get denied. Then you would be able to get more of the unsubsidized. So that you have to keep that in mind. You can't, you can't get the $5,500 at both schools for both semesters. So it's going to be divided. You will only get the unused portion of your loan eligibility in the spring semester when you transfer. So again, just be careful and make sure you are mindful of that. I think I don't have any more slides, so I'm going to stop my screen share at this point and just come back into the picture here. I got so busy talking, I was going to put some things in the chat in the comments, but I neglected to do that. But what I will do is this video will be up on our page as soon as the live stream ends. And if you go back and look at it and you have questions that come up and you want to get back with us, please be, just make sure you email us so that we can get your information and get your questions answered. I truly want you to be able to, get this information. If you want to copy of the information that I'm using, you certainly can do that. I want you to make sure you can get that. So what I want to do right now, let me see if I can go ahead and put that in the chat for you. Let's see. The screen is a little short here, so I wanted to post that for you. I'm not getting all of my, there it is. Okay, so let me put our contact information in the comments for you so that you can make sure you are able to contact us if you need to. And okay. All right, so we got that up, and yeah, so you can send us an email, you can call us during our phone hours if you have questions about any of the information, if you'd like a copy of the slides. And if you have other questions, I put the post, there's a form that we posted so that you can drop questions into us if you want. We're always interested in questions that you might have for us. We don't want you to go lacking. We want to make sure that your information that you're getting is accurate and that we're answering your questions. So please be sure to hit us up on our email, or again, that link that I put into the comment section is a form for questions, and you can put your email address in there if you'd like us to email back. I typically check that and try to answer those questions on the next session as it comes up, but I didn't have any this time, so I didn't get to answer any. But thank you for joining, and again, if you have questions, feel free to ask those in the email or give us a call. We'll be more than happy to make sure you're on track and make sure you're getting everything that you need to get your semester off to a good start, be it spring semester or next fall semester. So we're here to help you. So I'm signing off. Thank you again for joining me. As I said, this video will be up as soon as I end the live stream. And hopefully I will see you again next week. I'll be talking about the winter session courses and the spring bill. So this is typically going to impact our continuing students. So if you're a continuing student and you're taking courses over the winter session and you're going to be returning in the spring semester, or you just want to make sure you know how all of that works, be sure to tune in next week. I'll talk about that, and if you have questions about that you'd like to make sure you get answered, again, make sure you get those into us. All right, well, you all have a great evening. Stay dry out there. It's been really wet today. So have a great evening, and take care, and I'll hopefully be with you again next week. Bye-bye.